Your bank just charged you $35 because you had 30 cents too little. Not because they lost money, not because it cost them anything. The processing cost on their end, about $5. They kept the other 30, and the craziest part, that's completely legal. That's not even close to the worst thing on this list. This video is about systems, not like corporations bad. Ranting, I mean actual documented, designed mechanisms that extract money, time, and sanity from regular people, and we just accept them because they're normal. We grew up with them. They're written into the fine print. They have branding. I went through the research on 8 industries, and what I found is that the same trick keeps showing up over and over, just wearing different outfits. So we're going to go through the biggest ones, fast, and by the end of this video, you're going to look at some completely ordinary things. A bank fee, a subscription, a doctor's bill, and feel genuinely productively furious. Let's go. Here's a principle I want you to hold on to for this entire video. The less money you have, the more things cost. Say it out loud if you want. It sounds backwards. It is backwards, and it is the foundation of several multi-billion-dollar industries. Overdraft fees. You probably already know about these, but let me give you the scale. Morgan Chase made over $1 billion in overdraft fees in 1 year. Wells Fargo, another $1 billion. Navy Federal Credit Union, the one that specifically serves military families, made $335 million. $1 billion. From people whose accounts went negative. People who, by definition, did not have enough money. And here's the part that should make you throw your phone across the room. 21% of black adults paid overdraft fees in 2024. 16% of Hispanic adults. The fee doesn't care why your account went negative. It just hits. One overdraft can cascade into multiple fees. Because fees overdraft you, which triggers more fees. Which is why 6% of Americans don't even have bank accounts. Because the fees are genuinely scarier than being unbanked. That is not an accident. That is the product. You need $500 for an emergency. Car broke down, rent's due, whatever. You go to a payday lender because you can't get a bank loan. They give you $500. 2 weeks later, they want $575 back. That sounds fine, right? Until you do the math and realize that's a 400% annual percentage rate. In some states, it exceeds 600%. And here's the thing, the loan is designed so you can't pay it back in one cycle. So you roll it over, and again, and again. 72% of all payday loan fees in California come from borrowers who take out 7 or more loans a year. 7. They marketed it as emergency help. What it actually is a debt treadmill you can't get off. $2.4 billion extracted annually in fees alone. Emergency help. Sure. Okay, let's talk about healthcare. Specifically, let's talk about the part of healthcare that has nothing to do with healthcare. 25% of all U.S. healthcare spending goes to administrative overhead. Not doctors, not medicine, not equipment, admin. That's about $1 trillion a year shuffling paperwork. The U.S. spends 5 times more on healthcare administration than other wealthy countries. 5 times. And doctors, the people who, do the medicine, spend over 15% of their working hours navigating billing rules. That's not treating patients. That's filling out forms so insurers can decide whether to pay for treating patients. And then the insurers deny 20% of ACA marketplace claims. And fewer than 1% of those denials get appealed. Every unappealed denial becomes insurer profit. They're counting on you not fighting back. Okay, I want to pause for a second. Because we're halfway through and I realize this is starting to feel like a lot. Bank fees. Payday loans. $1 trillion in healthcare bureaucracy. Here's what I want you to notice. These aren't mistakes. They aren't bugs. The overdraft fee was engineered to repeat. The payday loan was structured so you can't escape. The insurance denial was issued knowing you won't appeal. Same trick. Different industry. Different logo on the website. We're going to keep going. And the next few ones, these are the ones you interact with every single day. Imagine you need a therapist. You're doing the responsible thing. Checking your insurance's in-network provider directory. There are hundreds of names. Great, right? You start calling. One number is disconnected. Another person retired 2 years ago. One says they're not taking new patients. One says they're not even in network anymore and has no idea why they're still listed. This is called a ghost network. And it's not rare. 55% of behavioral health providers listed in Medicare Advantage directories were inactive. 72% of providers that were contacted said they shouldn't have been listed at all. Your insurance plan looks like it covers mental health. The directory exists. The names are real. The access is not. And because you never actually see a provider, the insurance company never has to pay a claim. Appearance of coverage. Zero cost of coverage. Alright, this one is personal for me, and I think for literally everyone watching. You sign up for a free trial. It takes 12 seconds. You try to cancel. Where's the cancel button? Let me check settings. Not there. Account? Not there. Maybe, oh, you have to call a number during business hours for a streaming service. This is called a dark pattern, and it is a deliberate design choice. Easy sign up. Impossible cancellation. And sometimes, I love this one, they hit you with what designers actually call confirm shaming, where the button to cancel says something like, no thanks, I don't want to save money. The FTSE tried to pass a click to cancel rule. It got vacated. So right now enforcement is case by case. The business model here is simple. They're monetizing your inertia, your laziness, the fact that dealing with it is annoying enough that you just don't. And while we're here, loot boxes. Fortnite alone settled for $245 million for using confusing button layouts to trigger unintended purchases, specifically targeting kids, using randomized rewards and fake urgency. Variable rewards, frictionless payments aimed at children, family-friendly gaming. You've done this. You found the flight, the ticket, the rental. The price looks reasonable. Then checkout hits. Service fee, facility fee, resort fee, convenience fee. The resort fee is my personal villain because, and I need you to understand this, the resort fee exists on hotels that are not resorts. It is a made-up charge slapped onto a price so they can advertise a lower number and collect a higher one. The FTSE actually just passed a rule in 2025 requiring all-in pricing for live event tickets and short-term lodging. But the scope is still limited. Rental companies are paying out settlements, invitation homes, $48 million. Greystar, $24 million for hiding mandatory fees that in some cases added over $700 a year to what renters thought they were paying. Oh, and while we're spending more on housing, your groceries got smaller. 78% of shoppers have noticed shrinkflation. The bag of chips, the toilet paper roll, the container that's now 20% air, and they did it so quietly. Same price, less product. Only 51% of people actually check the unit price, which means nearly half of shoppers never even catch it, exploiting attention gaps. That's the official business strategy. 20% of American adults did gig work in 2024. 20%. That's not a side hustle phenomenon. That's a workforce. And the median wage on these platforms, after you account for expenses, gas, wear, and tear on your car, is $5 and $12 an hour. No benefits. No stability. And 65% of gig workers live in fear of being deactivated, not fired. Deactivated by an algorithm. With no explanation, no warning, no appeal process. 45% of them couldn't cover a $400 emergency. These companies took all the risk that employers used to absorb healthcare, retirement, slow periods, accidents, and transferred it entirely onto workers, then called it flexibility. The flexibility mostly is yours. The profit mostly is theirs. Here's what I want to leave you with. Because this isn't just a list of bad things. There's something connecting all of it. Overdraft fees, payday loans, ghost networks, subscription traps, junk fees, shrinkflation, gig work. Every single one of these follows the same structural logic. Find someone with low bargaining power, make them dependent on a system. Bury the real cost, design the exit to be painful. Collect the difference, the poverty penalty. Engineered consent, administrative friction, hidden pricing, lock-in mechanics. These aren't isolated scams that slip through the cracks. They're not edge cases or rogue bad actors. They are business models, documented, defended in court, approved by shareholders, presented in earnings calls as fee revenue and engagement metrics. And here's the part that I keep coming back to. Most of this is completely legal. Not because it's not harmful. Because the rules were built around the systems, not in spite of them. The lobbying is real. The regulatory capture is real. The FTSE can pass a rule and have it vacated on procedural grounds. The CFPB can try to cap overdraft fees and get sued. The scam isn't that someone tricked you. The scam is that it's normal. So here's what I want you to actually do with this. Next time you get hit with a junk fee, Dispute it. A lot of them just disappear when you ask. They're counting on you not asking. Next time a subscription is hard to cancel. Document it. Screenshot it. The Fitzy does take complaints. And next time someone tells you these problems exist because poor people make bad financial decisions, remember the $35 fee on a Door 30 shortfall. Remember the 400% APRA. Remember the ghost therapist. These aren't personal failures. They're structural features. If this made you feel something, angry, informed, slightly unhinged in a productive way, drop a comment with the one that got you the most. Mine is the ghost networks personally. That one lives in my head rent-free. If you want more of this, subscribe. I'm doing a whole series on systems that look normal from the outside and are quietly wild on the inside. I'll see you in the next one.